Hello, everyone. Can you hear me? Good evening. Let me know if you're here. Let me know if you can join. You can hear me. Okay. Can you hear me? I just want some feedback from anyone who is online before I go ahead, so that we will know how many of us is on tonight, and then um, we can just go. Okay, good. Thank you very much, Josh, for joining tonight. Good. Once I have, yeah, I think I will just start. Because today we planned for just 1 hour. I know it's Easter Monday, and a lot of us are still having fun, resting. Taking time out with family and friends. Taking time out with family and friends, and just having fun with our family members, which is quite good. I must say, I also had a good time with family members, and yes, it's a good one. Okay, good. It's a good one. So let's start. Let's go straight into the topic of today. The topic of today is about the time value of money, because I put it out on Facebook saying, what topic would you have to talk about today? And someone mentioned, okay, they want to know about the time value of money, and the other person, some other persons mentioned about short and long term investment. So I will talking about those two things today, but then I will start with the time value of money. And if you have any question while I go ahead, please do not hesitate to just let me know. I'll be more than happy to take your questions. And if there's any other question outside the topic that we are treating today that you think it's really important for you, you would like to know about, you want to just have some insight on, anything about, maybe habits, mindsets, money mindset, or investment, or savings, or, debt repayment, or questions on career, any of those questions, just put it on the chat. I can see the chat. I will pick them up, and then we can try as much as possible to treat it and address it accordingly. Okay, so what exactly is time value of money? Before I start giving you any kind of textbook textbook definition, my question will be that one of my clients has a dilemma. So I'm also posing this question to you. She has a dilemma whereby she's working, so she has a very good job, and a company or a manager told her, and my client's name is Lara, and then a manager told her that, I'm planning to give you $1,000 for a job well done on this particular project, and you can choose either to take that 1,000 euros today. I pay you at the end of the month, like with your what's it called, with your pay, with your monthly pay, or I'm going to, or you can choose to, collect this 1,000 dollars or 1,000 euros in 5 years' time. And the thing is, I'm so sure, like Lara is so sure that this 1,000 euros will be paid to her by her manager, by her company, because it's something that is contractual. So whether she takes it now, today, or whether she takes this money in 5 years' time, this 1,000 euros will be paid to her. So there is nothing like, okay, maybe they're not going to pay. So now imagine if so the certainty of payment is there. Okay, so imagine if you are Lara, or imagine you are asked to advise Lara what she should do. What would be your advice to Lara? Would you prefer to take the money today, or would you say, you know what, I have more than enough currently, and maybe the savings rate is not so much because I would get even minus for savings. What would you do? Would you prefer to collect the 1,000 euros today, or would you say, okay, I hear you, you can keep the money for me and I'll pick this 1,000 euros up in 5 years' time? I want you to let me know what your decision would be. Yes. What's your decision? What do you think? What's your decision? Like, what would you do in this case? Would you say, no, this money, I want it immediately, or maybe even 5 years is too long of a time. So let's say we say, okay, I will give you this 1,000 euros in 1 year. Maybe because of bonus periods. Okay, in 1 year time, I will give you this 1,000 euros. What would you suggest? What would you do? Would you prefer to collect this money today and say, no, thank you, I'm done with the project, I really appreciate it, just give me the 1,000 euros, or no, you know what, it's fine, I can wait for 1 year to collect this money? What will your decision be? I'm waiting. Let me know what your decision will be. Yes. What's your decision? Please tell me. Otherwise, I will go ahead if I'm not hearing anything from anyone. Okay, so no one is talking. What I would say is that, so should I wait? Is the decision coming, or you are still trying to decide if you want to go ahead or not? Just let me know. Just let me know. I'm waiting for you. I'm waiting for you. I'm waiting for you. I'm waiting for you to let me know what your decision would be. I'm waiting for you what your decision will be. Okay. So I can't get anyone. Anyway, based as a financial expert, right, from a business point of view, yes, I would rather say that Lara should collect the money today, because there's this popular saying that says a bird in time saves nine, right? And this is something very apt, especially when we think about the time value of money. What you have with you is better than what have out there, and somebody's just giving you a promise, saying, you know what, we are going to pay you that amount. Okay, so I would suggest that Lara collects the money. Now, from a general point of view, there are different reasons why I would suggest Lara to collect that money, that's 1,000 euros today. And that's because, an example would be the value, or let me say a definition would be that the value of money of 1,000 euros today is different from the value of 1,000 euros in 1 year. And the value of 1,000 euros in 1 year is different from a value of 1,000 euros in 2 years. And that's where we talk about things like the present value of money and the future value of money. Okay, so I'm going to further break this down to really make you understand. So, like I said, Lara has two options. It's either Lara says, okay, you know what, I'm going to collect the 1,000 euros today, or no, I can wait until some other time in the future to collect that €1. So I came up with a little bit of calculation, and then I'm going to use my calculation to explain how you can go about thinking of if you want to capture that amount today, or you want to capture it in the future. So, for example, if Lara decides to say, you know what, I want to collect that 1,000 euros today, like I would advise her to go ahead and collect that 1,000 euros today. If Lara gets a form of investment, let's say the investment will give her an annual return of 5%. If she decides to invest in ETFs, right, which 5%, for example, the S&P 500 is around 7% on the average for the last 30 years, right? So let's say Lara goes ahead and say, you know what, I found an investment portfolio and I'm going to be doing 5% for the next 5 years. At the end of that 5 years, based on compound interest, Lara would have been that 1,000 euros would be worth 1,276 euros, right? Which means that 1,276 euros in 5 years' time is worth 1,000 euros today. Okay, I don't know if that is clear. 1,276 would be in 5 years is what 1,000 euros will give you today, right? So Lara says, okay, you know what, I would rather take my 1,000 euros, invest it, and then in 5 years I know that my 1,000 euros would have grown to 1,276 euros. Okay, now if Lara says, you know what, dear manager, I'm not going to collect that money now. You can help me keep it. I know certainly you're going to give me this money. I would collect it at the end of 5 years. What Lara has done is to say, you know what, and assuming that there is no interest agreement between the two parties, right? What Lara has said is that, you know what, dear manager, you can trade with my money. I don't care about interest. Just make sure you give me the 1,000 euros in 5 years. Which means that the actual money that Lara is getting today is not eventually the 1,000 euros, because today, when you look at the value of money today, or the value of 1,000 euros in 5 years today, the value of 1,000 euros in 5 years is 783 euros SECA, right? So which means that Lara decided to not go for what she can have today, like the full 1,000 euros today. Instead, she went for 783 euros, because, she didn't agree on any interest rate. There was no compound interest coming in for her, and inflation is coming in. She just said, okay, dear manager, you can hold the money for me, and in 5 years, I'll collect my 1,000 euros. That money has lost value in a way for Lara. And that is why when we look at the time value of money, we look at, okay, comparing that money, the value of that money today, and the number of years we want to get the money, or we want to use the money. Now, to make it not so complicated, when you are looking at this topic, right, it's about, you're looking at it in terms of the interest rate. You are looking at it in terms of the lifespan, right, of when the delayed payment is supposed to come in. You are looking at the possibility of, for example, getting an annual payment every year. Those are the things you are looking at when you look at the time value of money, right? So again, in summary, it is better for you to say, you know what, I want to collect my 1,000 euros today. Thank you, and I can go ahead and look for my own investment vehicles, and I'm sorted, instead of keeping the money with someone else without any agreement on interest rate or things in that area. Now, why is it important? When you look at the when we, in terms of concrete differences or concrete importance of, the time value of money. I said inflation. I talked about inflation. That what what if Lara had gone for the 1,000 euros today, right? And then she invested it in some instruments that will give her 5% returns on annually in 5 years, that she will get about 1,200 plus in 5 years, right? Which means that the value of that money is 1,200 in 5 years. If inflation comes in at all, yeah, inflation will come in. So let's assume that the annual inflation is like 2% year on year. Because the interest rate or the return on investment Lara is getting on a year-on-year basis is higher than the inflation rate the 1,000 euros is subjected to, she is still going to get an increase, right? She's still going to get an increase. Instead of just saying, okay, don't do anything with the money, just hold it. Inflation will come year on year and it will wipe off the value. And inflation is not something we can avoid, especially this day whereby we know that governments are just printing money. There's so much money in the market, and the prices, because there's so much money, there's so much supply of cash, prices of goods, would go higher, for example. And that is why people prefer to, just collect their own money and be the one to take care of, whatever interest or whatever return on investment they get from it. So that is one reason why, you should look at time value of money and go for that money today instead of waiting for it tomorrow. The other thing is that, I said Lara's manager, it was sure that the company was going to pay her. What if the company didn't, renege on their agreement with Lara? What would she do? What if the company decides to, or let's say the company went bankrupt within that 5 years? There is nothing she can do. I mean, it's just a promissory note. It's not like a debt that they have to pay on regardless, right? So because of that uncertainty, people prefer to, take that risk for themselves. And that is why they would rather collect or make use of that cash today for themselves rather than putting it somewhere without any form of returns over a period of time, or with little or no returns over a period of time. So uncertainty is a key thing to consider when we look at time value of money. The other thing that is really important is in terms of, I won't say gratification, but present consumption. A lot of people will say, who guarantees you of tomorrow? Yeah, nobody guarantees anybody of tomorrow, but we do things because we hope that tomorrow we are going to wake up and we will continue life, and that is why we invest. But then also today you have to be able to take care of your basic needs. You have to be able to take care of those things that matters to you. And if that 1,000 euros, Lara can use it to do certain things that really matters, that brings her joy today, then she can go for it. She can go at it. And that is why it is really also important that, people will say, I'd rather get my money today rather than waiting for someone else to hold the money for me in cash or in other forms, right? And that's another important thing about time value of money. Again, if you have any question or if there's something that's not clear to you as I go ahead, please let me know. I also mentioned that there is opportunities for reinvestment. Again, when Lara decided to go for that 1,000 euros today, of course, Lara is going to go ahead and invest in S&P 500 because she knows or she's aware that that particular investment instrument would give her on the average 7% on an annual basis, which means her money would increase on an annual basis, right? And after 5 years, she would have really grown, and then they would have been compound interest even accrued to what she has. And that brings us again to the issue of compound interest, right? I did a video, a couple of in one of my videos, I talked at length about the power of compound interest, and the power of compound interest also comes into place when you are talking about time value of money, right? Because the more you roll over money, the more you turn it over and put it back into the system that it's working for you, it's yielding for you, the more increase or the more returns you're going to get. And that is how compound interest work, right? And if you're able to reinvest or take care of your own investment by yourself for yourself, I mean, why not do it? Why then just leaving it, laying it, or letting it lie fallow in a savings account or in some account without any form of interest coming across to you? And that is another important thing when we talk about, or when we look at the time value of money. Okay, so let me give another example here. Imagine that you won a lottery. Let me say the lottery the lottery is going to, you won a lottery, a 1 million euros worth of lottery. And the way lottery works, right? They tell you, we can pay you so amount, a lump sum amount at once. In this case, if they say, okay, we can pay you a lump sum amount of, you've won now, you've won like 1 million, but then they'll pay you 940,000 euros at once. Or they said, okay, we are going to pay you installment for 5 years, $200,000 annually for 5 years. And then that $200,000, comes up to 1 million at the end of 5 years. Now you are supposed to choose. What will you choose? Again, you can put your answers in the question box if you are with me. Otherwise, I can go ahead and read my answers for you or tell you what I think you should choose, right? So imagine you won a lottery of 1 million euros, right? And then they will give you normally two options. Either you get it a lump sum, or you get 200,000 annually, 200,000 annually for 5 years, which then comes to 1 million at the end of 5 years. What will you choose, or what do you think you should do? And if you're going for a lump sum, you are only getting 940,000. So there is this difference of 60,000 between the two. What will you do? So I would say that the best thing to do in this case would be, again, to calculate your net present value of money. I said when you think about time value of money, you look at it in terms of the present value of money or the future value of money. So which means if they give you the 940,000 euros today, you will calculate how much is that 940,000 euros how much would that 940,000 euros become in 5 years, right? If you calculate it, and based on the interest you get and everything involved in the tenure and all of that, if you calculate and the lump sum they are giving you today is more than that's 1 million at the end of the 5 years, then you should go for your 940,000 euros today. Don't wait. Don't say, okay, I would collect 200,000 annually. No, because for example, if you can invest that 940,000 euros, and you can't, maybe again S&P 500, because it's really, or you can invest in some bond that will give you an interest rate that would give you more income than the 1 million at the end of the 5 years, then you go for it. And that is the importance of, before we make those kind of decisions, we look at the net present value of money or the future value of money. And if you are asking, so I hear all you say, but how can I even calculate net present value of money? How can I calculate? How do I know what is what? Well, you can shoot, if you have those kind of decisions to make, You can shoot me a message, or you can go online, and there are online calculators to come to those kind of conclusion, and they would help you in your investment decisions. Okay, so our lottery jackpot would suggest that our lottery jackpots go for 940,000 euros lump sum, because we know that there are investment instruments out there that are quite stable, that if he or she, let's say she now, okay, if she invests that money into it, she would get even more than that 1 million euros at the end of 5 years. All right. Now, if we flip the coin, and say, you know what, no, I am very risk averse. I don't want to go all of a sudden from grace to grass, by spending all the money, because people know that you collected a lump sum and then there will be much demand on me and all of that. So I would rather collect the lump sum annually for 5 years, 200,000 euros, which is also okay. But then if we now calculate, so what we can do in that case is to calculate the present value of that 200,000 euros you get year on year on the annuity. It's called annuity. I don't want to use big grammar for you, but it's called annuity, right? So you calculate it. Based on my calculation, I came to the fact that, by the time you calculate the 200 euros you get for 5 years, that's 200,000 euros you get for 5 years, the total of 1 million they would have paid you, or complete 1 million they would have paid you at the end of 5 years. The value of it today is around 865,000, let me say 866,000 euros, which is it's way less than our 940,000 euros that we have, right? It's really, really way less than it, which means that for me, again, I would just say, you know what, I would rather go for the lump sum, do my own form of investment, and then get my own returns. Now, it's not that getting the split money, getting the tranche kind of payment is bad. No. If you do your calculations well, you can decide, okay, based on inflation, based on the risk involved, it's better to do annuity, or you say, no, inflation is okay, but then the interest or the return on investment is high enough to cover my inflation, then I would decide for the lump sum. And this also comes especially for people who are deciding on retirement. When you want to go for your retirement, they would ask you, so how do you want to collect your retirement? Especially if you've worked for a private company, right? They would ask you, do you want to collect your whole gratuity at once, or you want us to pay in terms of pension on a monthly basis? This calculation is really, really important. Why? Again, because if you can get an investment vehicle whereby you can invest that gratuity that they will pay you into, which will give you higher returns than the total value of the pension they are going to pay you, then please go for it. Go for it. But that's the mistake most people make. They just look at it in the face of, okay, I don't want to stress myself so much. Okay, I will just leave it for the company to do for me, or I would leave it for the government to do for me. Don't do this yourself. Ask financial advisors. Ask people, look for these calculations, and let them help you to calculate it. Let them help you to calculate the value of the future money you are getting, because most times the value of the future money you are getting today is lesser. Yeah, it's lesser. So do that, and if you can find a way of investing that money for yourself or by yourself, where you can really monitor it, then you should go for it. Okay, somebody said that they're going to take the lump sum and invest for them. So yeah, that is what I also thought. I would also say, but like I said, it's important that you make your calculations very well, because it's not as if the the annual payment or the annuities you're going to be getting is also bad. It's not bad in a way if you are able to calculate it very well, and they're giving you a good returns actually, right? They're giving you good returns for the annuity they're paying you, then you can go for the annuity as well. But make sure you ask for advice, calculate it and see which one works better for you. Okay, so I think that's all I have for what's it called today, the time value of money. If you have questions about this, please let me know. I'll be more than happy to talk about it or to answer it for you. The next thing we are going to go into is, short-term and long-term investment. Somebody wrote me, he said that he has some cash. Let me quickly pull out the message. He said he has some he had some cash with him and he's trying to decide if he can how he should invest it, if he should invest it on a short-term investment or on a long-term investment. Before you decide whether to invest something on a short term or on a long term, there are certain things you have to look at. First, you have to look at what is the goal of that invest, or what is your goal? What is your why? You need to understand your why of investing in the first place. If your why of investing is for something that is long term, then of course look for a long term instrument. Now, if your why of investing is for a short term, then of course look for a short term, instrument. Let me give an example. If you're investing, if you have cash now and you're saying, okay, you know what, I want to start putting something together for my retirement, and you're a millennial or you're in Gen Z, of course that is a long-term investment decision, which means that you are supposed to look for investment vehicles which are long-term in nature. So an example would be, investing in real estate. Real estate is not something that you can, except you are doing a flipping over of houses, which is something different. Real estate is a long-term investment. Buying a house is a long-term investment. So you can say, okay, you know what, I'd rather put that money into buying a piece of land, and then start putting the money into, paying for mortgage or parts of my mortgage, and then I will start paying on a monthly basis towards the total ownership of that house. That's a long-term investment in a way. Now, you can say, you know what, I'm going to invest that money in bonds. That is, you loan the government the money, and sometimes the bonds can be as long as 5 years, sometimes 30 years. I've heard of bonds of 100 years. Yes. So, you know what? I'm going to, loan the money to the government, and then there will be coupons, and then you can get cash flow from it every year. And then that when you're ready to get back your funds, you can sell those bonds and get back your capital. Now, in between, you've been able to get some interest based on what the government paid back, or based on what the government paid back as interest from the loan you gave them, right? So that is another form of investment, right? So I've mentioned two now. I've mentioned real estate, and the other one is, for example, investing in bonds. Another form of long-term investment that I categorize it as a form of long-term investment is investing in equities, investing in the stock market, investing in shares. If you're not a trader, if you're not someone, that is buying shares today and selling it tomorrow to gain, capital, to gain price, to be able to take out the money based on price increase, then you should look at investment in the stock market as a long term. You buy and you hold, just like Grandpa Warren Buffett. He buys and he holds. He holds on the long term, for the long term, right? And those kind of investments, you can even be more specific and look out for investment that will pay you dividend, right? They would, and you know that, okay, When they pay you dividends, some kind of cash flow for you, so that whenever you need money, you know that there's something, some income coming in for you while your investment is still secure, you know, as a form of equity with the company you invested in. So that is the third form of long-term investment that I would say you should look out for. Well, another long-term investment that I would say you should look out for, which is quite risky, right? But if you find a good company that is good and you know the leadership are quite good, you should definitely go for it. Although it could be very, very risky. So super risky would be, for example, angel investing or venture capital, or you know, crowdfunding for angel investing. When you invest in startups, in new companies, don't expect to get back your returns in 1 year or 2 years or 3 years. This can take like 5 years to 7 years and sometimes to 10 years before you really see some fruit. And like I said, the risk for this particular kind of investment is really high. So you could also lose your money. So don't put, for example, all your investment into venture capital, I would say. So, but if you have the luxury, if you have that capability or the capacity, just allot certain amount of your investment into venture capital or angel investing, and then you are leaving it there for a long time, 5 6 7 years, right? Because for example, you can get back your money when they want to do when they want to do an IPO, or there's a bigger investor that is buying all the shares of that company, and then you get your capital back with interest. And it could, you know, the interest you could get, for example, for angel investing could vary. It could be up to sometimes 10x, and if you're lucky they did an IPO, well, welcome to the millionaires club at times. So it can be that good, right? So that is one other thing I would suggest as a when you're looking at a long-term kind of investment. All right. Another form of long-term investment, or let me say investment, would be, you know, doing some kind of what's it called, treasury bills. I would say mid-term investment, not short-term. You can, because treasury bills could be mid-term and even short-term. So if you have treasury bills of 2 years, you know, that is a mid-term investment that you can put your money into. And for short-term, let's now come to short term. So short term would be something like, you know, buying treasury bills, you know, or doing fixed deposit with your bank. They will give you some interest rate which is higher than what you would normally get from your savings. And that's, you know, a simple kind of investment, for example, that you can do. Another investment that I would encourage is that, for example, if you're in Nigeria, you know, I'm a big fan, I'm a big champion of agri tech investment, right? So look out for agri-tech investment that you can invest in. They most times they are short terms, you know, they do turning over within 6 months, within 9 months, for example, sometimes even within 3 months or 4 months, depending on what cycle or what kind of product they are trying to invest that money into. So yes, you can do that. That's also some form of short-term investment that you can do. Okay. I think that on the short-term investment. Those are the kind of investment that is coming to my mind currently. I don't know if there is any other questions regarding that. If you have questions, please let me know before we go ahead. It's like today we are not so chitty chatty, which I get, which I get because I'm not seeing so much of comments coming in. Yes. Okay. If there are no other questions, I'm still waiting. Like, if you have questions regarding the things that we've said today, just let me know. Otherwise, we can move on to other things and then we will call it a day, because at the end of the day, it doesn't have to be like, you know, we don't have to stay too long. Basically, it's about getting the right information out, getting it out as clear as possible, and not wasting so much time saying what what is not necessarily needed. That is what I want to say. And before I say another thing, because what came to my mind right now, because this person was asking that they have some cash and they are thinking about, short-term or long-term investment. I said one of the things you have to look at is, what is the reason for that for that investment? Why, right? And for example, you also have to look at what do you for that investment, and then what do you want to use that money for at the end of the day, or what is the goal of that cash you have. Now, for example, a classical example I give is, if that cash is for to pay school fees, of course you are not supposed to put that cash into a long-term investment if you know that you need to pay that school fees in the next, I don't know, 6 months or in the next 4 months. So in that case, it is not wise to put the funds, to put that cash into a long-term investment. You should be looking at, in that case, like something short-term, again, like treasury bills. Of course, the interest rate they will give you with treasury bills today, I think, is really, really small, but you can go for treasury bills, right? And then you get you get your income or your interest rate. And then before you go for treasury bills, also always look at what the banks would offer in terms of fixed deposit, because the way it works is that if treasury bills is high, maybe then the fixed deposit would not be so high, and if treasury bills are low, I mean the interest rate now, then it's both of them swings, and then you can do fixed deposit also for 3 months. You're telling the bank to go ahead and transact with your money, and they will give you some certain interest at the end of the month. But what you don't want to do is just leaving cash unattended to in your bank account. Don't leave cash in your bank account unattended to. Always try to make your money work, and don't be greedy about it. Don't go looking for things that will don't go looking for things that is just quick cash. Don't do that to yourself, because most times results have shown again and again that when you see something that is too good to be true, right, there is always something behind the curtain, right? And a lot of people end up losing money because of that. So don't go for things that are too flashy, or offers that are too, especially in today's social media age, in today's internet age, that you can do business with someone and you will never meet that person, so you don't even have anyone to hold accountable. And that way a lot of people, or a lot of funny people or scammers, can perpetrate so many funny evil by putting out things that are not true, and luring innocent hardworking people that really want to invest genuinely, luring them into their scam nest, and then getting away with their money. And then you see a lot of people crying and not feeling not so happy about how the money went away. So be careful when things are too good to be true. Please ask people that that are around you, that are knowledgeable. Sorry for that. That are knowledgeable, and you could also make your own research. And at the end of the day, before you do any form of research at all, before you do a single investment at all, just take like 2 minutes and Google that thing. Just put the name of the product or of that company or whatever into Google and put reviews. You will be surprised and amazed at what you would find out. What's going on in that company. Of course, if the company is good, people would talk there. And if the company is bad, people would also say it. But what you don't want to do is to invest, whether short term or long term, without checking, without making your research. Research is very powerful. Don't be lazy. Do the work, because it's only people that do the work that get the result. If you don't do the work, you will lose money. So that is one thing I always tell my clients, to always find out their research. Okay. And to that question, something just came to my mind now. I I mentioned that, for long term. So for example, I mentioned investing in real estate, investing in bonds, investing in stock markets, investing in treasury bills and all of that. One of the other things you can invest in also invest in bitcoins. Now when you are investing in bitcoins, because we are still at the very early stage of bitcoins, and not just bitcoin, like the whole different coins, they call it the altcoins, because we are still at the very early stage. Now is the time to actually, put those free money you are getting, money that will not pinch you, let me put it that way, money that will not break your heart if you lose it, right? I'm not saying you should lose money, but easy money that you can afford to put away, to put aside, put that money into bitcoin. Just buy one or two coins there and just track it, read up about the companies that are floating those coins, because every day we keep getting news that this thing would become more and more relevant, because companies are getting involved, governments are getting involved, regulators are getting involved, more and more people are getting involved, right? And the more you have people interacting with it, whether it is Bitcoin, with ADA, with Ethereum, with Binance Cash, or whatever coin it is, the more you have people, interacting with it, and the more you have more technologies being developed or being used to support those coins, the higher the chances that those things would mature, would become more valuable and become more useful. And then you can, if you are smart enough to invest early into Bitcoin, you should be able to get something reasonable out at some point or at a later date. So that is one thing I also want to put out there. Don't neglect it. Don't say no, it's not for me. Don't totally ignore it. I know people who, between last year, when Bitcoin was, even in the last quarter of last year, Bitcoin was still around 10, I think 20,000 thereabout, that got into it at that time. This year, when Bitcoin took that that turbocharged flight into 50s, into 60s, imagine, within months, they went triple of what they invested. They got triple of what they invested. And so that is why you should, and I don't see the trend, coming down in the next years. Yes. And that's why I would suggest again, for that person that asked that question, look for ways to, invest in Bitcoin, buy some. No, don't say, okay, Bitcoin is totally out of it. Rather, take a look at it and you'll see that it's actually worth it. Okay. Excuse me. That is that about how to invest your cash. Okay. The last thing I would say is that, or the last thing I would say about this topic today as we round up would be that, when you think about investments generally, I've said this before and I'll say it again and again. We are not looking at investing because we have to get out cash today. We are looking at it because we are trying to create a lifestyle for ourselves at some point, which means that we are investing on a long-term basis. When you invest on a short-term basis, it's more likely you're going to incur more loss than if you look at investment, or if you approach investment on a long-term basis. And the same thing happens when you, in terms of time value of money, or looking at, okay, what should I invest my cash on, or so. Because I know my audience, what I tell my audience is that when you're looking at money, look at it on a long-term basis. Look at it as something that compounds, right? Look at it as something that adds up. And don't use all your hands to it. Don't say, okay, now I got this interest rate, I'm going to use it. No. Rather, do what? Turn it over. And like in one of my videos that I talked about agro partnerships, I talk about agro investment. There was this agro investment I made And whenever I went into it with a long-term perspective. Of course, they were doing it for us in cycles, like short-term, short-term. But I had my mind of long-term. And whenever they release the funds back to us, I don't take it out. Rather, I would turn it back, because for me, it's a long-term, which means that you can also turn your seemingly short-term investment into long-term. How do you do that? By recycling it, especially if it's going to give you good returns. So you recycle it, and then by the time you recycle it several times, it has eventually turned out to be, a long-term investment for you. And an advantage of doing that, advantage of turning your short-term investment into long-term investment, is because by time during those time of recycling, you have that flexibility of liquidity, right? You have the flexibility of liquidity. And most times also, when you invest in short terms, also have it in mind that the interest rate you would get for short term might not be as high as when you are investing on the long term. I mean, the returns on investment you will get. Because if I give you 1,000 euros now to say, okay, invest in this money for me, and you will pay me back in 1 year, and I give another person 1,000 euros and I say, invest this money, you will pay me back, or I'm lending you this money, you will pay me back in 2 years, right? The person doing 2 years, because I have, it takes longer for me to get back my money from that person. I would ask for a higher return on investment from this person. Of course, I would ask for a higher return on investment, because then there is that risk of, if this person goes insolvent, if he goes bankrupt, how do I get my money? But if it's a short term, then I'm saying, okay, lesser time, lesser tenure, then the interest rate will be lower. But if it's a long term, then you should look out for, bargaining for more returns on investment if you are doing that. Okay, any questions so far? Otherwise, we will round up here. I think it's a quiet day, I would say, or it's a quiet live session, I must say. And I think it's because of the kind of special day we are in, because today is supposed to be holidays for so many of us. So people are relaxing and they don't want to get into the work mode. And when we talk about money, sometimes it's really, it's money can cost work. Let me put it that way. Is there any question at this point? Or we can, say a bye-bye. And thank you so much for joining me today. I really appreciate you. I really appreciate your joining. I can see like 6 people online, and I'm so glad you joined. Thank you for Josh for staying all along, and the other people. I don't know you, but you know yourself. So, and for those other people that will join this, that will later watch this live stream, thank you so much for coming in. And if you have any questions regarding the things we discussed today, do not hesitate to just drop them. I will pick them up, I will answer them, and you can shoot me an email. I'll be more than happy to help. And if you have questions regarding career, yesterday or 2 days ago, there was a new video about how to write your resume, and I gave like 10 PowerPoints that you can use to write your resume, and your resume would definitely get noticed by the recruiter, the talent acquisition person, the hiring managers, the CEO, the MD, whoever is looking out for that position. Yes, so go to that video, go and check it out, and get your foot into the door and get that job and start earning money. And if you have other questions about investing, for example, how compound interest works, I already made a video about that. Go on my channel. It's really very self-explanatory. If you want to know about agro partnerships, it's also there, one of the videos I made. If you want to know about how to invest in Nigeria, it's also on my channel. All right, guys. So thank you so much. It's been my pleasure to be here with you today. And I will see you again in the next live and in the next video. All right, have a good evening or good morning or good afternoon wherever you are, and thank you so much, Josh. And wherever you are, have a fun new start of the week, a fun full week. Let me put it that way. And I will see you some other time in the next live session, like I said, or in the next video. All right. Bye bye.